Hello and welcome to Crypto Weeklies. In this video, we are going to talk about Chainlink and its token link. None of the content is financial advice. We'll go with the machine learning based price forecast, regression analysis, and accumulation strategies. None of the content indicates any financial opinion. We use data science and machine learning based outputs to identify what is a theoretical bull case, bear case, and neutral case. Again, this model is developed in-house using machine learning techniques, seasonal ARMA, LSTM, and XGBoost. This model uses weekly price action for link since November 2017. Again, you can see over here weekly averages instead of looking at the candles. This model looks at the weekly averages compared to the this is on TradingView. This is the logarithmic scale links price action on TradingView versus the machine learning model over here side by side. Right now, before we continue with the machine learning model, let's look at the price action at around $13.70, coming close to the 20-week simple moving average at around currently at around $15.91 over here in the red line, and the $15.53, which is the 21-week exponential moving average. Price in starting about early April to early May of 2025 tried to rally back to the 20 week ceiling, the 20-week simple moving average, and where it met resistance was at the 20-week simple moving average. Did not successfully break out of that the red line over here. Also, that also corresponded and met with the 0.23 fib level coming at around $16. So those are now two major areas of resistance to contend with, $16.20 and the currently the 20-week simple moving average coming in at around slightly under $16. Now, if we were to look at some of the longer term trend lines, such as over here from, and try to connect as many points as possible, the price is coming in at a key level. Let's say if it gets squeezed between this the slow moving averages over here and the somewhere over here, if the price continues in the downturn, those 2 points could meet somewhere at around between $14 and $14.50. If the prices were to break out of this range again, then again once breaking down and then using that breakdown as a rocket fuel to pump up any potential rallies, the key levels to watch from what Link did in 2024 was first in March rallied to 0.382 fib level from the 2021 high to the 2022 lows. Again, that's how the fib levels are calculated. The $52 2021 highs to the 2023 lows, actually at around less than $5, slightly less than $5. That's where the 0.382 came into the picture at around $23 in March. In December, the price went slightly higher at around 0.5 fib level, hovering at over that level at around $28. If this time around is slightly higher than these two tops that Link managed in 2024, the first level is to look at is the 0.618 at around $34. The second level is at around $42, that's the 0.786, and the next level is the previous all-time high at around $55. Again, if we check it over here, the previous all-time high in 2021 was at around $52. If there is another major bull rally in the next 6 months, the ceiling, or the first ceiling to look, if Link were to make any new all-time high in 2025 compared to in 2021, the 1.618 makes the most compelling case at this late stage of the bull run. Again, Link is nowhere close to the previous all-time high. Again, more close to the lows than to the bear market lows, especially the 2022 lows at around $6 than the all-time high at around $52. That makes the expected value anything above 1.618 kind of unlikely, that around $82. That's the higher end per the Fibonacci levels. Now going to the machine learning based forecast. In the next 6 months, if there is a non-Euphoria bull case or one standard deviation bull case in the market, in the next 6 months, the ceiling estimated per the machine learning model is between $14 and about $25. A $25 link is somewhere at a midpoint between the 0.382 and the 0.5 fib level. Again, that means without a euphoria, breaking out of the 0.5 fib level is tough per the machine learning model. If there is a euphoria in the market in the next 6 months per the 2 standard deviation 95 percentile ceiling, link could be somewhere between $16.28 and about $39 to $40. So $40 link is close to that 0.786, the 0.786 at around $42. The weekly average at $40 could mean that, again, for example, over here when price at a weekly average was at around $47, in reality the wick at that point in time went as high as about $50 to $53. So weekly averages tend to be slightly muted versions of what the actual top is. Again, no one can predict the actual top to the dollar or in fractions of dollars. Always this comes without any financial advice, but when dealing with weekly averages, things get more smoothened out, and the purpose is to identify a major reversal or major signal where price has topped out. Again, that $40 target at 0.786, that's the 2 standard deviation ceiling for link. And if there were to be any rallies further than the 95 percentile ceiling, that is greater than 2 standard deviation price performance, if that were to materialize, the seasonality is in the post halving years. That means anything above this orange line, if it were to occur, it would occur. If it were to occur in this next 6 months, that would be a favorable seasonality. That is the 3 standard deviation ceiling for link between $17.92 and about $59 to $60. A $60 link is predicted as a price ceiling within that 99.7%, or only realistically speaking less than 0.15% chance. Again, this might come as, why is it 0.15? That is because 99.7 bull case meets with the 99.7 bear case to form that range of what could theoretically be a 3 standard deviation move. So assigning only a half of that to a breakout is 0.15%. There is only 0.15% chance that price per this model goes higher than $60 in the next 6 months, towards the early part of November of 2025. Again, that still leaves December as favorable seasonality for any price breakouts above the $60 target. But essentially, again, looking for 6 months into the future, the $60 target is the 3 standard deviation ceiling. So key ceilings per the model, the $40 or 0.786, and this is the 2 standard deviation euphoria case for link. The 3 standard deviation blow off top scenario is at around $60, where again, that is a new all-time high, especially with looking at the $47 weekly high, the average weekly high in 2021. If we look at any further estimates, again, the bull case at slightly muted bull case in the non-euphoria phase, it is at around $25, close to that point, between that 0.3 and 0.5, 0.382 and 0.5 fib levels. Looking at the regression based valuation for link, to look for if link is right now overvalued or undervalued, the polynomial regression functions help. The pink line helps to identify if link is overvalued or undervalued. Ideally, when the price is lower than 1 standard deviation residual applied to the fair value, which is this green line, accumulating below the green line in the larger scheme of things is definitely, per historical analysis, not the worst idea. That means whenever price is below the green line, like it is now, it offers, again, this model tries to incorporate the bullish phases and the bearish phases of the market cycle by shifting the direction of the regression function. So in the bull market, the prices go up with time. In the bear market, prices go down with time, as noted by the shape of the green line or the pink line over here. Right now, we are in an upswing per the model since about early April of 2024. Although the prices for link have been declining since December, in macro level, link is putting higher lows and higher highs. So you can see that even the lows are higher than the previous 6 months lows. even that is has been the case in the March to April drop in 2025. The lows were much higher than August 2024 lows. So looking at the fair value, it's coming in at around $25. $25 is where the one standard deviation machine learning price forecast also exists at around $25. That means if the price were to go to that $25 target, that would signal an end of the undervaluation phase per this model. The fair value for Link comes at around $41. That is the 2 standard deviation ceiling, as well as what we spoke about over here, 0.786, close to that 0.786 level. And the opposite of that pink line is the yellow line, where if there is any euphoria phase in the market, that could begin at around $73 level. So the non-euphoria ceiling per the regression model is coming in at around $73. Anything above $73 is at this point considered lofty evaluation. You can see there was a instance in 2024 where the price went slightly higher than the 1 standard deviation, hugged that 2 standard deviation orange line. If that kind of a euphoria ceiling were to occur for Link, the price could be at around $125. That is the scenario where the highs for 2025 from a regression perspective are similar to the highs that Link enjoyed in 2021. Again, price did go slightly higher than the 2 standard deviation, but never went to the 3 standard deviation red line in 2021. So again, why should this time be any different? Even this time, if we look at the market cycles and the maturity of the assets, the going to that orange line becomes more and more difficult as the phases kind of move on. So personally speaking, the highs that I could kind of rationalize is a midpoint between the yellow line and the orange line. There is a very low chance that the prices go to that orange line even in the euphoria phase per the regression model. The 2 standard deviation machine learning based price forecast again is not too outlandish, but if we take a midpoint of this, roughly speaking 200 divided by 2, it's again close to that $100 target, which would be a key level for Link to break out of at this late stage of the bull run. Overall, the DCM model, again from the risk perspective right now, it's signaling close to zero risk. Again, this model identified a great accumulation range. Again, you can see over here, where whenever the risk is less than 10%, especially in 2022 and in 2023, this model did a phenomenal job to identify where the less than 10% is essentially where this model provided this purple color guidance, where the risk to DCA was the least between essentially May 2022 till September 2023. So this model's utility is to identify great entry points in the market, as well as the opposite. Again, right now we are in a similar phase per the model that we were in May 2022 till June 2023 from a risk-based perspective. This risk is a result of that growing regression function, polynomial regression function. That is, if we were to look at the opposite of this, would be when the euphoria phase kind of kicks in, and again when the rallies kind of get overheated, where instead of DCing in the market, DCing out makes most of amount of sense. Between 0.4 to 0.6 risk for Link. Again, Link does not all the time go to that higher risk level, which is typically above 70% risk. Again, the last time the risk levels kind of topped at around 58%. The one before that topped at around 76%. Again, this time trying to be more conservative between 40% and 60%. If the prices were to go in that territory, between that could signal the price action between $56 and about $77, kind of close to that 1 standard deviation regression based outcome, where the yellow line and the price kind of meet. Would be the price action would be higher than the previous all-time high that Link achieved in 2021 at around $52. So that's the regression based optimistic case between optimistic but not too outlandish case between $56 and about $77. A $77 Link would be close to that 1.618 fib level, again signaling some amount of confluence with within these models. Again, this model predicts if the risk were to go to at around at an exorbitant level, somewhere at around highest risk between 0.9 and 0.1, 90% and above. The top for link could be between $108 and $119. So that's the max permissible ceiling right now, coming in at around, again you can see over here, 2 standard deviation ceiling at around $94 and a 20% safety net. Again, the rallies don't resolve at that dotted red line, but about between 10 to 20% higher than that red line is usually where the major peaks occur. If that kind of parabola is ahead of us, we are in for a ride. Between price action between $100 and $120 would be close to that, between 80% risk and 100% risk for link. Again, that those are some of the days to look for if they happen. Again, those kind of outlandish bull case scenarios again do materialize once every 4-5 years again, but that again from a strategy perspective, again not financial advice, looking and hoping for those days to occur does not make that amount of sense, especially in this micro environment. That's why the risk levels of key interests are between 40% and 60%, signaling between a top between $57 and about $77 for link this time around. Looking for the SMA or simple moving average based risk right now comes at around 26%. Similar story with 40 to 60% outlook, slightly more conservative between $26, essentially where that major risk major resistances are. So this model says the 40 to 60% risk is between $25 and essentially $31, close to that 0.5 fib level, and essentially between as at a midpoint between the 0.382 and 0.5, and the midpoint between 0.5 and 0.618. So that again you can see essentially the candles resolve at the middle of this Fibonacci range. Although the wicks go to the top of the range, the candle bodies are at the middle of the range. So that's the simple moving average based scenario. Again, this last iteration of the rally in December 2024, the risk level went at around 80%. If they were to go to that 80%, then the price could be at around $35 per the SMA model. A $35 link would be close to that 0.618 fib level, and end of the 0.618 fib level. Looking at the time weighted average price model though, we did come close to that blue line, which signals an entry of the accumulation phase, where especially for link this time around, that presented a clear cut accumulation zone below the price action, when the price action was below the blue line. Again, this is not some retroactively fitted model, this is a live model. This model did indicate entry point in accumulation phase at around early April of 2025. That's where we made a lot of videos related to link over here. This is the homepage of the YouTube channel. If you're interested, you can click like and subscribe over here. You can see a lot of link related videos, especially the ones 1 month ago and close to that time, where the seasonality favored an entry point in terms of DCA. This model did kick in that kind of a risk reward. Right now the prices are close to the time weighted average price. Time weighted average price comes at around $10.20. The price is at around $12.90. So not too far away from, again right now it's at slightly higher at around $13. But if it were to, the prices were to come close to that $10.30 to 40 cents target, that could meet the time weighted average price and signal, and again a secondary or tertiary accumulation phase for link if there were any cool off in the market. Per this model, again the risk is not too high at this point in time, again coming in at around 20-25%. Ideally speaking, anything below 10% risk per this model is good enough per my interpretation of the model. Again, not financial advice. Overall, as an estimated bull run target for link, based on risk levels, not the machine learning calculation, the regression risk is right now 0, because prices are so far off the regression based fair value. Time weighted average price risk is 30%. Simple moving average price risk is 28%. Weighted risk is 15%. If the risk were to go to that highest risk band between 0.9 and that is between 90% and 100%, the estimated bull run peak is at around $88.88. Coincidentally, that represents about a 6.5 reward X reward, that is a 6.5 times the price of the current price of about $13, $13.70. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.